Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, January the 4th. So happy 2023. Hope everyone had a happy new year. It was a very crazy market last year, as we know. S&P down about 20%. I think it was 19.4%, something like that. So not a good year. We actually had a pretty good year at Simpler, and I had a really good year in the bias portfolio that I manage. So pretty happy with that, and we'll see if we can do it again in 2023. So as we start the year out, today was FOMC Day, Federal Open Market Committee, and we started out early this morning with, let me get my drawing tool up here. This was when ISM data was released. We chopping back and forth like we've been doing a lot lately. Big flush down, number was reported, and then we're up and off to the races, and we stop on our Voodoo Skyline up here. This is ES at 38.94. Right, just shy of 3,900. Thought we might reach up there and touch that, but we did not. We hit, failed a couple of times. Came back up here, and this is when the FOMC, the minutes were released, and we get a big flush down, big rip higher, big flush down, big rip higher, big flush down, big rip higher. Crazy stuff to try to trade. Let me zoom in on here a little bit and show you. I mean, just back and forth, and I do not believe that is retail traders, of course, doing that. I think it's algos, driving that and pushing it all, to one extreme to the other and hitting stops and all that kind of stuff. Is interesting to see that we did stop down here in the same place. And right here was kind of sort of the same place, but anyway, just some observation. I do have fib levels I was looking at all in between here with different time frames and all that kind of stuff. Very hard to trade this kind of stuff. I mean, you can come in and trade futures and stuff like that, or do the end of the day stuff, which I do like doing, and trying to get a reasonable idea of where we might end up on the day. I did not do it this day just because we were all over the map. But let's go back and look at this and go out, say, on a 10-day look, and this kind of shows you what we are up against. This is, you see, it's kind of faint, but that says 2023, so that's last year, and this is this year, starting out. 10-day chart, and it's just, we're just back and forth, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. But we're very range bound here. If you look at this, and again, this is ES, but we are between the low down there, 37.88, so say about 3,800 to about 3,900, kind of roughly, and more more than that. We're kind of in this zone here, so we have been for a little while. Let's go to a 20-day chart. Again, you can see a little clearer now that for a pretty good period of time we've just been chopping here, with these larger swings in place prior to this, and this was the last month CPI report and PPI and the Fed and all that kind of stuff, right? So where do we go from here? And of course that's the hardest question to answer. Let me show you here on a 1-year chart. We have just been, and this is of course last year, trailing 1 year, and we just been going down and bounce up and down, and we keep hitting off this trend line right here excuse me, there, and come down. We could come back up here and bounce up and and then fail and continue this to the downside, or we could break. This could be the point where we break higher. I think this is less likely that we break higher and just go there, because we've got a lot of things in the background that are kind of weighing on the market. And today, the FOMC minutes, all of the officials at the Fed said that they would not expect any rate cuts this year. and to expect higher than anticipated levels, coming up. So they're going to keep being aggressive and raising rates. Now, a lot of that is probably baked in already, but the biggest thing we have next Thursday, we have CPI, which will be a really big, important deal to see if inflation is coming back down or continuing to go up. The last two have been just a sliver better than expected, which is good for the market. But we'll see what happens here. If this is the third in a row that's a little bit better than expected, yes, maybe this is the turning point where we go up. We have the week after that, the following Tuesday, we have PPI, and then on February the 1st, we have the next Fed meeting where they will say whatever they're going to do. But then you sprinkle in earnings on top of that. We've got earnings coming up in a couple of weeks, and we'll see what Amazon and Google and Apple and Tesla and everybody's going to do. I don't think it's going to be good. Don't think it's going to be a good quarter. So, we definitely could go lower and potentially take out this low back here at 3,500 on the ES, and the same would apply to the Nasdaq and the Russell 2000, etc. in all the markets. The Dow has been holding up better than the rest, but again, we're at a pretty critical point here, and we'll probably in some chop and wild swings and all that kind of stuff up until again next Friday. We have payrolls. Forgot about that. So we got payrolls on Friday. The next big thing is going to be CPI next Thursday, and then of course with the Fed. So if you're trading this, be very nimble and take profits when you can and all that kind of stuff. That's what we've been doing. It's been working. I still think it's too early to go in here and start buying the dip, because if things do indeed turn out worse and we get hotter inflation number, the Fed says, well, we thought we might start cutting rates in 2024. Now we might push that back, that kind of stuff. This market could go lower, and I've seen some projections down a decent bit lower than we are right now. So, I'm not sweating it yet, not like a black swan type deal or anything like that. But again, there are some meaningful things on the horizon that don't look good. But the market is always forward looking, so we don't want to get too bearish too soon ahead of a bunch of important data that's coming out. So with that, I will wind it up here and just say be careful trading this stuff. We know it's a crazy market. If you like to trade, this is your market. It's very tough to be right for very long, because as soon as you get short here, then you need to get long here, and then you get short here, and then you get long here, and it's just we're switching back and forth and back and forth. It makes it very, very tough. So be careful out there. Come to see us in the trading rooms at Simpler, and we can help you, show you what we're doing. And with that, let me wind it up, and you guys have a great rest of the day, and I'll see you at the next update. Thanks. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me